Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.
Good evening to everyone who's joined into this broadcast this Friday. My guest this week is Mr. Taher Badshah. He's the Director and Chief Investment Officer of Invesco Mutual Fund in India. Tahir's had a very distinguished career behind him, over 2.5 decades in the field of sell side as well as buy side. Prior to this, he has been working with Motilal Oswal Asset Management and has had a career that spanned, like I said, across sell side and buy side. He's been with Kotak Institutional Equities. He's been with Motilal Oswal Securities, Dresdner Alliance, and he's actually an engineer by training. And then, of course, life had different plans, and I've had the pleasure of knowing him for the better part of I think the last 10 or 12 years, and one of the most humble and fascinating human beings. And a pleasure to be interacting with him in this format as a service provider to him. Tahir, good evening to you. Thank you so much for taking time out to do this and
Good evening
welcome
to you as
aboard.
well, Rahul. Thanks for having me on this call.
Pleasure. So, just want to start off. I generally tend to start off by asking people everything's okay at home, at work, everyone's safe, and everything's good.
Yeah, pretty much. Thanks very much for asking. All fine as it could be. God has been kind till now, and we just hope to stay safe, all of us.
True that. So, Tahir, let's go back to the start of your journey and we'll build on from there. Most people that I have spoken to on this platform over the last few months started off with their education as engineers and have turned out to be fund managers. And the journeys have always been fascinating, with a lot of the people that I've spoken to. So, how did your sort of transition happen from engineering into the field of finance and then subsequently into equity broking? Talk to us a little bit about those formative years.
Yeah, so I mean, those were kind of different times, and I think probably what it appears is that you've interviewed people from my vintage a little more than the others, and that is why some of these coincidences. Uh, but so I think I passed out of engineering sometime in 1991, and well, engineering happened as it happens to all all of those budding people who were born in the 1975, 1970, 1980 era, and it happened to me as well. And uh, but the way the country was at that point in time, the engineering opportunities associated with engineering were probably very few and far between. If at
Mhm.
all, you were you had the wherewithal and the means. Uh, you would probably fly abroad and go on to do your masters and so on, which probably was not the case with me. And idea was to therefore, kind of trundle along and uh, engineering was something which I did like. It's not to say that since I moved on to doing financial services, engineering is something which I've completely abandoned. I mean, yes, I mean, as of now, it obviously doesn't feature in my life, but at that time, it did have a lot of significance. And I think I was happy being an engineer. But unfortunately, opportunities were not too many from the point of view of employment, the jobs, or whatever else, or even actually doing um, uh, more advanced studies in India
Mhm.
itself. So I think I had a penchant for research, and uh, even when I took up a job as an engineer, you generally tend to have that mindset of digging into things and probing and so on and so forth. So that was a mindset, and even when I took up my first job, it was more like an R&D engineer, and it was in the area of telecom products. Uh, you would have seen those. I don't know whether you've seen them, but I'm sure you must have. There in many of the rural centers, you will still find them these call logger uh, booths where you would go and you would dial a number and then it would flash on the screen above you.
Yeah.
It would print out that receipt, etc. At the end of the call. Uh, so I got a chance to actually develop the software for that, and with a company called App Lab, and they were pretty pioneering at that point in time in the 90s um,
Mhm.
in this field of work. And so it started off as a writing of code and developing something which was quite unique at that point in time, and also had a utility at the end of it all. It always had that. I always had that bent of mind with respect to research and probing and so on and so forth. And I somewhere that uh, importance of finance grew in my mind over a period of time. I therefore desperately wanted to do an MBA. I did a couple of years working as an engineer, uh, developing the software, and it kind of opened up my mind to a few other things as well. When I went into the MBA program, obviously I was not entirely clear that I wanted to do equity markets or finance for that matter. But as things rolled along, uh, I also realized over those 2.5 years of my MBA days, कि यार, this is the ये सबसे fastest सीढ़ी है to going up, and you know, uh, and there was that desperation to go up, in life, and we were almost scraping the bottom, so we had to figure out a way where the ladder was a little quicker, that snake and ladders. So jaldi se upar chad jao. So I thought this was a fast track mode, and I said I should devote all my energies to actually getting into capital markets or whatever is associated with capital market. I wasn't even too sure at that point in time whether it should be research and investments. But somewhere 2 years late, or in the second year of ups towards the end of the course, I was pretty clear that equity markets is where I wanted to be, because I thought it to be a natural extension of my research forte, which I developed as an engineer and even somewhat during my formative years at work. So that's how the bug hit me, and then it was always about equity markets. Even after I came out of college and I mean business school, it was always about doing research, equity markets, managing money also at some point in time in future. So that was all kind of landscaped out pretty well in the initial formative years itself.
It was a good marriage advertisement back then, wasn't it? To have the combination of being an engineer and an MBA.
Oh yeah, that too was there. Absolutely, yeah, it was a great label to have. And uh, 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 now that I don't know whether it improved your chances to marriage and so on. So, uh, but but it was something which was quite telling. It was quite different as well in those times, and yeah, I was pretty clear in my mind that this is the way to go. Uh, I probably had I was never ever clear as much as I was after my MBA as to what I wanted to do in life uh, compared to ever before. So that was a good thing. It doesn't happen to many people. It finally dawned on me as to what I wanted to do in life. So that was a nice thing to happen.
Is that something you still recommend to young professionals, Taher, that MBA is still very necessary to be a successful professional in the field of either sell side or the buy side? Because you have the rise of a CFA, for example, in a very prominent way, and the CFA Society of India is coming up, and I mean, you still look at the number of people that are doing, that the applications for the IITs, for example. So, I mean, is it still a very good option for people to be doing, or is the world changing? You're sort of learning more on the job. How do you assess the importance of the MBA in your career, and is it still as relevant as it was back then in today's day and age?
I would think so. It still has a lot of relevance, and while of course CFA is a lot more specialized, it is MBA is much more generalized in nature. And I think it's important to be part of. It's important that you are lucky enough to be part of a good school. And I was at SPJN, and it was not one of the most prominent schools at that point in time. It was maybe number three, number four, even within India or within Bombay. But it had its own different pedagogy, and that was what was attractive at that point in time to me. Um, uh, we had a completely different class setting. We used to have what are known as domes, as in the form of classrooms. It was completely a novel concept at that. It was not a typical, sitting arrangement that you would see in a typical classroom. So it had its own. We used to lean a lot on course material out of Harvard. I think we had a great dean at that point in time in Mr. Manesh Shrikant, who recently passed away a few years ago. But he's done a wonderful job, and and we now know where SP Jain is on the map. But what I'm trying to say is that actually it broadened a lot of, it opens up your mind to a lot of other things, around general management, around way of life, around conduct, around discipline, everything else, which specialized courses either in classrooms or through correspondence or online or whatever doesn't give you as much. I don't know whether it gives you. So I think I was very happy being there. Um, I had those 2 great years. I mean, like as I said, my maximum amount of learning actually in life has happened in those 2 years of MBA, and then subsequently in a couple of very interesting positions that I've been associated with in my last 25 years in work. So I would still say that MBA is material, or any such thing which is equivalent of giving you an exposure which is in different disciplines, different areas of life, different walks of life. It just opens your mind up to and allows you the flexibility to determine as to where your strengths are, what your strong points are, what your weak points are, and which probably other specialized courses do not probably give you.
Hmm. You mentioned Harvard briefly. It's also a matter of pride for Indians that we have two successive deans of Indian origin there. The second one just took over about a week back.
Absolutely,
So
yes.
I think that was a big moment of pride for a lot of Indians, that two successive deans back to back. I don't think it's ever happened in Harvard's history where they've had two Indians successively be the deans of that university. You started off at Motilal Oswal. That was your first job, if I'm not mistaken, as a sell-side equity analyst.
Yes. So I did
And
have a brief stint prior to that, but it was not anything close to what I thought would be equity research.
Mhm.
And then within a year, or maybe about 15 months of my job on campus, through campus, I kind of started to look out, and I knew that what I was doing was not exactly what I wanted to do. But at that time, the interesting point, Rahul, was that there were not many outfits which were doing research. I mean,
Mhm.
the concept of equity research in India itself was very alien. I'm talking about 94, 95. Um, we just opened up our markets, and foreign investors, or FIIs as they are known as, started to make an advent. We had very
Mhm.
few FII houses who were coming in as sell side research outfits. There were, probably I can count on my fingertips, there were some 4 Indian houses, if I can recollect, who were doing research. There was, of course, Motilal Oswal, which was at that point in time went by the brand called Inquire, which was an
Inquiry, right?
acronym for Indian Equity Research.
Right.
And then there was a firm called Insight. They had an eye as a logo. I still
Mhm.
distinctly remember. And then there was Inam, which was actually considered to be at the forefront of doing research, equity research at that point in time, although much of it was in-house for them. And then I think there was Kotak, which unfortunately I lost out as an opportunity on campus. They were looking for actually uh, 2 positions in equity research, and we were just 3 applicants out of our batch who wanted to do equity research. And unfortunately, they picked up the other 2. I was left out. But uh, as destiny had it, I finally once again had a chance 10 odd years later to work for them as an equity analyst. So that was nice. But yes, that was a situation at that time. So I actually went around with my CV, uh, seeking a position in equity research, and uh, so I randomly stepped into an office of Inquire at Fort in Mumbai, and uh,
Mhm.
Mr. Agarwal, Ramdeo Agarwal, was he used to actually spend part of his time at that point in time in the research office, and some part of it he used to spend in the other office and in looking at the broking business. And fortunately, the day when I went there, he was around in office, and I just requested the receptionist uh, at the entrance to actually give me try and figure out if there's I can meet him. And I was fortunate enough to you know get to meet him immediately on that day itself. So I had a conversation with him, and uh, I didn't know much about equity research at that point in time, and he asked me a few questions. He asked me a good number of questions, but I probably almost nodded my head uh, to everything. I just didn't have an answer, and he asked me about a few stocks and so on, and which I had no clue about. Uh, but I told him that I want to do research, and I think I can be good at it. And I am an engineer. I'm from the industrial background, so I can understand a few businesses, etc., etc. And that's all that I did. And somehow he probably, I don't know what he saw in me at that point in time, but a few days later I got a call saying that, look, okay, I'm willing to hire you as a junior analyst. And that's how I got going. So 1995 is, yes, how I began with. So it's almost like a walk-in interview for me, actually, to be honest with you.
So, so I'll ask you about that interview that you had with Mr. Ramdeo Agarwal. But on a lighter note, have you tracked where those two people's careers have gone who got into Kotak when you didn't?
So they are no longer at. I mean, of course, they've abandoned ship long back. I think. One of them has actually continued. Sorry, it's out of the two of them, one has turned into an investment banker. So both are in the U.S. But they didn't really spend much time at Kotak. One of them did probably about 3 or 4 years after campus. The other one probably did not. And one of them did pursue a career in equity research all throughout. And now he's part of UBS in the US, and he's migrated to becoming a fund manager over time. So he does manage money and certain specialized pharma funds, etc. So yes, out of the two of them, at least one has continued to uh, on the path of research.
Fair enough. I believe the one of the key stock ideas that you discussed during your interview process was Hero. What was Hero Honda then?
Yeah, well, it was not part of
How did that idea?
Yeah, it's an interesting episode actually, but it didn't really happen at the time of the interview. It was so first a couple of years again the markets were not really doing much in late 94, 95, and um, uh, so when he hired me, he said that you are an engineer and so on, so why don't you take up autos as a sector and industrials as a sector, and autos was one of them. So I started with autos, and there were actually at that point in time there were barely maybe OEMs and ancillaries put together. Maybe there were some 7 or 8 enterprises to track. So there was a Hero, Bajaj, Telco at that point in time, and then there was a LML, if you remember, and then there was there were things like Mahindra, of course, and Myco, and a few others. So there were barely some 10 odd companies, and we started off. And in the first couple of years, it was just a struggle. Uh, just one fine day, I just kind of, I was sitting out late and in the Inquire office, and so I just stumbled upon a news clipping which said, Hero Honda at that point in time was going to expand capacity by some 50% or so, and which was kind of long delayed. It was happening after some delay of some 2 years or something, because at that point in time they used to import quite a lot of the capital equipment from Japan, and the rupee had depreciated against the yen at that point in time. So things had gone pretty haywire, and therefore there was some delays. So I read that clipping, and then I kind of started to kind of probe a little more into it, and I thought 50% is a good increase, and but at that time motorcycles were not in favor. I mean, it was a scooter market. Bajaj dominated it. They were 80-90% of the market, and scooters, motorcycles barely used to sell 10, 15, 20%, but they were the leaders still. And it was a 25-25 joint venture, and it was not a company which would talk a lot, and they had nothing like investor. It was I think if I recollect right, it was at some 200 crore market cap, 200 rupees price, 10 rupees equity capital, or 10 crore equity capital,
Wow.
1 crore share, 1 crore shares. So that's how it was, 200 crores of market cap, and I so one evening, late in the evening, I remember at 7:30, Ramdev ji, after finishing he came across my desk, and he has this habit of saying, "क्या हाल चाल है? क्या कर रहे हो?" मतलब, I said, "Sir, ये कैसा कुछ दिख रहा है? I mean, ये शायद interesting हो सकता है." And then we started to think of it as what if this market transforms from being a scooter story to a motorcycle story? And because motorcycles were not prevalent, but we said that they had this famous campaign called "Fill It, Shut It, Forget It," and
Yeah.
oil prices were very high at that point in time, so fuel was not very cheap, and motorcycles were known to be a lot more fuel efficient. And they had this thing. Okay, the other thing that was there was that there was something called two-stroke versus four-stroke motorcycles, and
Yes.
four-stroke motorcycles used to be a lot more fuel efficient than two-stroke. And Honda was the only guy at that point in time who had a very proven four-stroke technology. So these guys used to work on a four-stroke motorcycle. TVS and others used to be on two strokes. Um, so we said, what if we build a proposition? What if there is a demand for motorcycles, and especially from rural markets, because rural market scooters wouldn't work. Uh, they were they had the low, ground clearance, and which is not amenable to rural markets. We didn't have really great roads at that point in time. We still don't in many parts. But we said that what if this market were to shift, therefore, from scooters to motorcycles over time? These guys could really dominate, and now they've got capacity and so on and so forth. So we wrote this whole story at that point in time about shift from scooters to motorcycles. And therefore, we went on with this thing called buy Hero Honda and sell Bajaj Auto was a theme at that point in time. And we as the way we are as analysts and fund managers, etc., and then we lay out our sheets and we say that look, okay. I distinctly remember they used to sell something like 20,000 motorcycles a month at that time. Okay. Hero, and we said, what if this goes to 30,000 units? The next some years, 50% growth, and that would, and they were trading at some 10, 12 multiples, and so on. So we put that out, uh, and we said 90% scooter market will fall down to 75%, and 10% motorcycles will go to 25%. Uh, 10 years later, where it stood. I mean, 80% was
Right.
motorcycles and 20% was scooters. So much so that the largest scooter manufacturer in the country closed shop and started to manufacture motorcycles. Uh,
Mhm.
so it was a great value migration strategy, play at that point in time. And you know, I even at that point in time, I don't think it's sitting in 97, 90. This was, I think, 97, 98. I don't think I could have envisaged that somewhere in 2020 or even 2015, they would start manufacturing or selling 600,000 vehicles a month
Mhm.
from 20,000. It was as I think back upon it, it amazes me that uh, what can happen in a country which is uh,
Yeah.
such as India, and especially something which is a good value proposition. It's then we saw that happen in telecom in the subsequent decade between 2000 and 2010, and uh, so these are very interesting. But this is how the whole Hero Honda story happened, and it just went on to do I don't know what. It must have done some 10 or 15x in a span of less than 10 years or less than 7, 8 years. It just it was an amazing story at that point. So yeah, it was nice to be
I
associated as a naive rookie analyst with one of the most prominent stories in the Indian auto industry.
I assume you would be on the speed dial of Mr. Munjal then.
No, in fact, like I said, I had a tough time in meeting people out there. I somehow randomly got in touch with a guy who I was lucky enough to at the plant. They used to have only one plant at that point, which is the Taher Badshah plant near Gurgaon. And I got hold of a plant manager, a guy who was probably about 50 years at that point in time. He became a good friend of mine subsequently. And he
Uh-huh.
used to give me some information which was basically about so the only number that I used to track, because the new capacity had come up, so my only this thing was to see how the production is ramping up and what are you doing to sales. And at that
Mhm.
time is when the new model, the Splendor, was launched. Okay, and the Splendor became the rage subsequently, and even today it is their best-selling product. So I used to kind of call him to just know कि भाई आज के दिन में कितना तुम्हारा गाड़ी निकला मतलब plant से, that was the and that was my expertise actually. And Mr. Agarwal used to come up and down, run the office, and only used to ask me that question, भाई आज का number क्या है, कैसा है, but he was passionate. I mean, of course we focused on that data points, but he was really passionate about the story because it was a great business. He used to read a lot about. He had started to read a lot about Warren Buffett at that point in time.
Mm-hmm.
And this was a perfect example. I mean, what can happen to a business which has a large canvas, good runway, low penetration, impeccable balance sheet even at that time. Even at that time, they used to distribute something like 30-40% of the profits. So great dividend payout, uh, low leverage, everything. It was textbook Buffett kind of investing, or whatever you could derive as analogies. And it was great learning. And he had a lot more faith than probably even I had as an analyst in the stock. So that's how that story, it almost, I would like to think, I don't know, Mr. Agarwal would probably agree with me, but it just put Motilal Oswal on the map. We were kind of synonymous with hero on the street, but we didn't really have, till then, we didn't really have much access to the company. But subsequently, so much so that in the mid 2000s, Mr. Munjal would actually give an interview only to Motilal Oswal. And at that point in time, when they started off their annual conferences, Mr. Munjala at that point made it a point to attend those conferences as one of their speakers. So up until then, the hero wouldn't figure in anybody's, uh, you know, uh, any of these conferences or any of these meeting panels. So it was quite an achievement at that time. Yeah.
No, full credit to you for that. You spoke about one campaign which was fill it, shut it, forget it. Let's move to another campaign of Kitna Deti Hai, which was the campaign of Maruti,
Maruti, yeah.
which subsequently became the campaign of Maruti, and you were associated. And of course, we're a mileage-obsessed nation, and most people today, when they even walk into buying any car, that's a by default question when they ask you kitna deti hai. It's and that was a beautiful campaign. But in many ways, I always think about Maruti as equivalent to Sholay, because when Sholay released, it actually didn't do well, and it went on to become a rage much later. Talk to us about the Maruti experience also, because that was probably another defining moment of your career as well. And if I remember correctly, in the initial years, either the subscription was not good or it did not do too well after listing, and people, I think it was an issue that probably didn't even go through, if I'm not
Yeah,
mistaken.
absolutely. It was almost an issue
Yeah,
which didn't happen.
and here we are. So talk to us a little bit about the experience.
Yeah, so it was nice to actually be associated with another milestone in the automotive industry in India, which was Maruti. And uh, so so I remember Kotak is a firm with which where I was at that point in time, and uh, Mr. Kotak was actually and team were associated with the investment banking side of Kotak was actually associated with what was the golden handshake between Maruti and the government of Suzuki and the government of India at that time, because they used to have a 50-50 share, and there was an exchange of one golden share, which actually gave Suzuki the control. That was the first disinvestment of sorts, divestments of sorts. And Kotak, as a firm, had actually led that deal for that one golden share. And Mr. Shauri, who was the disinvestment minister at that point in time in the AB Vajpayee NDA government, had almost made it a promise that, look, as and whenever Maruti goes in for an IPO, Kotak will be the lead manager on the left-hand side. So, uh, uh, I was therefore the de facto analyst who was driving it, and it almost was an IPO which didn't happen because around, I think it was in May of 2004, if I'm not mistaken, and something had happened, some geopolitical issue had happened just a few weeks prior, and Mr. Shauri went up one fine day to Mr. Kotak to say that uh, should we go ahead with this issue and there was this confusion, and I distinctly remember it was a Saturday, and uh, a week prior to the launch of the NFO, and we were four of us as bankers, I think, Kotak plus ICICI and HSBC at that point in time, and one more. And we were all kind of, consulted whether we should go ahead or not. But I just felt that it was the right time. I mean, the company was doing the right things. It was actually coming out of a phase where it was losing market share. It was a big threat, a perceived threat at that time. Look, will Maruti be able to move away from small cars, and what if India migrates to the sedans of the world and the mid-sized cars, and they don't have anything even in the global stable. So what are they going to do? And it was just the M800 at that time, and maybe Alto one was just about kind of making its appearance on the horizon. But we just felt that they were doing the right things. I think they had a great manager in Mr. Jagdish Khattar at that point in time, who was the MD of Maruti, and he was an absolute go-getter. Uh, uh, I've never seen anybody as aggressive and as passionate about the at a CEO level, driving the business from the front almost on a daily basis. And I had, as an analyst, we and many others, I myself and many others had a chance to actually interact with them. But I intuitively, I felt that it was the right time for the company to list. But unfortunately, the IPO market was dead at that point in time. In fact, the whole IPO market in India revived after the Maruti IPO, and it almost not only did not happen, it was almost on the verge of not subscribing, almost like the Infosys way. Uh, we went around touring the world in some 7 days, around the world in 7 days, kind of a thing. All of us, the four of us as analysts. And the day of the opening, we were still not clear whether it'll go through. I think it was probably some 2,000 crore kind of offering at that time for a market cap of 5 or 1,000. And uh, we were not too sure. I distinctly remember there was an analyst meeting of Ashok Leyland, and we all analysts were on the bus from the airport to one of their plants in Chennai. And at 9:30 in the morning, those days the markets used to open a little earlier, a little later at about 10. And at 9:30 we were in the bus on the way, and we got a call saying that uh, Tiro Price has put in a full bid for the whole issue. And it was not known to us, even though we had all kind of gone around meeting all these foreign investors, etc. And they lapped up the whole issue, one time subscribed at 9:30 in the morning. And then rest is history. It did well initially. Then they, put up that they had that episode in between within a year. I think they thought of 100% sub, and something of that sort happened, and it lost ground. Then they reversed that decision. Subsequently, they came up with a similar proposal a few years ago again in 2014-15 when they were doing this Gujarat plant. But it's what it is today, and again, a brilliant company. It's turned out to be a phenomenal investment for many of their shareholders, and yeah, it's been glad to be associated with that milestone as well. So it's been a defining moment as far as my career as an analyst is concerned.
Interesting. There have been so many of these stories, right, Tahir, over the years. I mean, even if you look at something like an Aisha, it was never supposed to be the story it became.
Absolutely.
It started off as, and I don't think even Siddharth Lal had the slightest clue that this would become what it did eventually. But sometimes, as the famous English song goes, I found love in a hopeless place. Sometimes you just don't know where you're going and what comes up. But
I associate with this entirely because since again we were auto analysts at that point in time, and well, nothing against Aisha, but this was a company which was absolutely shunned by analysts. And when we would go to Delhi to visit, and Delhi was a hub because you go to Delhi and you end up meeting 5 companies in the auto space. And we would kind of, by the end of it all, when we would come to Aisha, it would be like, why are we here? At that time, it was Aisha Tractors Limited, which was what it was as a listed entity. But great transformation. It's a huge case study in its own way. Again, a huge proposition on value migration and transformation. Almost like Harvard cases going back to college.
How do you react to, you said Hero was essentially a scooter player and then became a motorcycle player, and then of course the entire ratio changed in the country. A lot of people often say that Bajaj never entered the scooter market, and they should have. So on one side, the thesis was scooters will become motorcycles, the market, and the other side was that you had one motorcycle player that refused to go into scooters. So it seems a bit paradoxical in nature. How do you sort of view this parody of sorts, if you will.
Yeah, it's been a. I mean, even I wouldn't have thought that later on it would have been the question of they not wanting to go back to what was their stronghold, to begin with. Uh, uh, but I think organizations evolve over time. They chart out their own course, and the markets evolve differently. So scooters have made a great comeback as road conditions have improved, as acceptance of the vehicle from the you know from the fairer sex has actually come about. So that's opened up a huge new market, and uh, uh, you know, uh, I think now it is a stage where different kinds of products coexist. So I think from a market learning perspective, it is also another lesson that never say never. Uh, uh, there is always a possibility for something which you would probably think is dead makes a great comeback, almost rising from the ashes. So, uh, uh, that's another learning lesson as such, that you can't write off anything beyond a particular point, and particularly in a country like India uh, where things just keep evolving all the while and preferences keep changing.
True that. I'm just curious. I mean, so when a sell side analyst comes to pitch a Hero or a Maruti to you today, what goes through your mind? I just want to get into it. Do you smile and say, I know it all? You're
No, no,
quickly pitching this to
no, I think to be fair, many of the analysts of today are doing a great job. I mean, we don't really have much of data and much of things at our disposal at that point in time to judge things. We went by a lot of intuition and, well, call it gut feel or conviction. Uh, and uh, I think now they are a lot more accomplished, they're a lot more polished in what they do. So clearly, I think as a manager, uh, we don't have a choice but to be open about everything, and that is essentially the point. And you in the markets, I mean, as one important learning experience, uh, it's a very humbling activity. And so way up, you will feel that you're on the sky and sitting in seventh heaven, and by 3:30 in the afternoon, you will be brought back to earth. So all happens in a space of barely a few hours. So I think it is important for everybody to just keep their heads on their shoulders and be very open about things. And nobody knows everything, and I think things keep evolving. So it's there's always a lot to learn, and I think many of the analysts, not just auto analysts, but in every other area, the whole market and the way the whole analyst community is evolving is I never envisaged something like this 20 years ago when we started off as analysts. And uh, the landscape is completely different. Analysts are tracking 30, 40, 50 companies at a time, maybe even more. Hats off to them. I don't know whether I would have been able to do as good a job as an analyst now uh, under the current configuration.
Well, talk to us a little bit about your investment philosophy, Taher. How do you go about selecting a company to invest? What is the thought process that goes on in your mind before you eventually decide to put money into a stock?
So at least a good part of my buy side career as a manager or as a fund manager, at least, has been in organizations where we've gone by a fairly well conceived, well defined philosophy around how we want to view things, and it has changed over time, and it's kind of evolved, and it's got more refined and so on. But there was a good starting point to begin with, so it was not lose. It was even a starting off with Motilal Oswal with a QGLP philosophy. It provided a framework. I mean, it may not necessarily have been the most uh, accurate of frameworks, and it may not necessarily have been um, the best of it, but I think it was so. Um, the good part about a process is that there's nothing like a good or a bad process. It is about how much do you follow it, and how disciplined are you about following the process day in and day out.
Sure.
And I think that's what has actually uh, uh, been the case for me in my last 2 or 3 stints, that we've had a good process to uh, follow through with, and uh, uh, that makes life a lot easier over time in terms of making your investment decisions, because uh, that you have thought through the investment rationale very, very clearly before you've gone into it, as defined by your process. So I think the process at Motilal and even now at Invesco, we have a very clear framework which tells us how do we want to approach each company, what is the investment rationale, and that becomes a great starting point, because once your investment rationale is known, over time as a manager or as an analyst, uh, the only thing that you need to do is keep tracking whether the company is or the investment is going as per that rationale. If there's any deviation from that rationale, then it probably becomes a case for either a review or a sell or whatever else. So I think having that framework and process makes all the difference. It gives you a lot of good sleep at night. You don't really need to worry about crazy stock price movements on a daily basis, up or down. And you just know why you have bought that damn thing for, and whether it is delivering on that promise. And if it is not, then need to take action, irrespective of whether the market likes it or doesn't like it. So, so I think once again, I've been lucky in this regard to have been associated with firms which have put process at the forefront. Uh, we The mutual fund industry in India is not very young. It's not too old either. But I think as we are evolving and as we are growing as an industry, I think, uh, and when I look at and having spent some time now with a foreign firm over the last 4 years, the first time in my career that I worked for an MNC, um, uh, it's a fair bit of learning in terms of how these guys who run billions and trillions of dollars, even billions of dollars in one particular strategy itself, how do they conduct themselves? I don't really think at Invesco, if you ask me today, do they have a concept of a staff fund manager, or is there anybody who stands out as a fund manager who is known to kind of drive uh, the bulk of the assets or something? There's nothing of that nature. I mean, it's even if it is significantly underplayed. Uh, what we've always given importance to is, and I'm sure it's all about process and discipline at all these firms which run billions and trillions of dollars. So I think even the Indian asset management industry over time, as it develops, as it grows, and I'm sure it will from where it is today. I think importance of process, discipline, etc., will become much more uh, prominent for a variety of players. So I think that is something which I foresee happening. And from my style or investment perspective, again, I've approached things with a very open mind. I've approached it as a learning process. I have seen growth companies, and I've now started to see, uh, you know, even value companies, and uh, we've understood the art of making money even out of value. I think generally, of course, in India, growth is very prevalent, and it's becoming a rage even around the world as such. But I think we don't really feel that value is dead, and we feel that if it is done in a disciplined manner, even value can make money, and that's my biggest learning, at least. So I probably originated from a from an ecosystem which gave a lot of premium to growth, and to growth investing. But over time, I think having a flexible head allows you to actually, you know, soak up other ways of making money as well, other routes or other strategies of making money as well. And I think that's been my good fortune, that I've kind of evolved, or even as a personality for my own self. I now appreciate value investing as well, as much as. So I always like the adage which Howard Marks has, and he said it once in one of his books, I think, that there is no business which is so great that you pay any price for it and you'll make money out of it. And there's no business which is so bad, barring some which are really gruesome, that if you pay the right price for it, you will not make money on it. So you know, ultimately as investors and fund managers, we have to kind of make money. We don't really want to just decorate our portfolios with trophies. So it's even keeping apart the compulsions of daily NAVs and performances and whatever else. But idea is to essentially make money, and I think the value is also one way of making money, but provided you do it in a very disciplined manner. So I think for me, I'm glad that so many people do say that many distinguished fund managers do say that they are good at one and managers can't be good at both. I wouldn't like to claim that I'm good at both or any such thing, but I would like to say that I'm good at appreciating both the styles of investing, and uh, uh, to that extent, therefore, I'm able to kind of reconcile myself to all types of opportunities which come in front of us, and uh, that's a nice thing to be in. That's a nice position to be in, because then you're not constraining yourself from you know with a narrow universe or with narrow set of options.
What would you define or say was the defining moment of your career? When did you feel that Tahir had arrived through your fund management career? Was there a certain moment where you felt I belonged here? This is what I had worked for.
Yeah, it's kind of happened a little more recently, and after I moved that moved to Invesco. I mean, I didn't really know that people outside of my firm or my immediate friend circle knew me as much. I was kind of almost embarrassed when uh, people started to generally know me. I mean, they knew what I'd done and they knew what I'd kind of been doing at some of my earlier stints and so on. So that was quite surprising, and I was not really much of a media guy at that time. I wasn't even doing a lot of interviews to feel that look okay, since I'm now on television, etc. People know me. But when I started my journey at Invesco, and when I started to because when I came into Invesco, I think what I came in was with the idea of building out a business. It was almost like building a new business. I mean, I had kind of at one level done that at Motilal Oswal when I joined them in 2010, because they were just setting up their mutual fund business at that time. So it was about building out a business even then. But Invesco was different in the sense that it was a 10-year-old startup when I joined. It had been around for almost 10 years, but hadn't really gone uh, uh, very further. Uh, so I thought when I joined also, it was with the express idea that look, if some kind of proper uh, market connect can be established and distribution connect can be established, uh, uh, this firm can deliver something, because it had a very strong process and everything was pretty clean, despite it having its own issues with regard to its previous ownership and brand and so on. But uh, underlying the investment activity was very well conducted up until then. So it was about actually bringing in that market connect and trying to communicate the message more clearly to investors and distributors and channel partners. And when I started doing that, I kind of realized that people know me, and people, uh, you know, uh, probably are putting in some level of confidence in me. And it was a nice, it was a happy realization, but it was also a very uh, uh, at one level an awakening to a important responsibility as well, because I knew that if I had to build it, it would have a lot of the faith of many underlying investors and distributors and other partners who would be putting their faith in me. Um, so it came with a lot of good feeling and a lot of responsibility as well. But that is when I felt that yes, I kind of enjoy some standing in the industry, and probably I've done something decent enough over the last few years to see that confidence in people, in me, out of people. So
So
that
in
was
some
probably the
ways,
time.
in
Sorry, go
some
ahead.
ways, if I, and correct me if I'm wrong. So in some ways, the move from Motilal Oswal to Invesco also happened because maybe subconsciously you wanted to come out of the shadows of Mr. Oswal and Mr. Agarwal and build your own personal identity. Would that be a fair assumption to make?
Yeah, I did feel I was ready for something on my own, where I probably enjoyed a lot more freedom, liberty, and a lot more responsibility to as well. Uh, and I was uh, I was pleasantly surprised that uh, people were willing to back me um, outside of Motilal Oswal as well. Um, uh, I had some great learnings out of those places. In fact, my other uh, quirk of my career has been that it's been two occasions when I've actually gone back to my earlier firm to work. One being Motilal Oswal, and the other one being Kotak. Although on both
Mhm.
occasions it was with in a different role, different capacity. But I have two such stints where I've gone back, and both those places have welcomed me very well, and I've had both those stints been very successful and memorable for me. So I think it was always. Uh, uh, I almost felt that when I was even walking out of Motilal Oswal, I had the great backing and you know support of Mr. Oswal, Mr. Agarwal. Mr. Ramdeo ji has never, on both the occasions, is to be very fair to him. I mean, whenever I've expressed on both those occasions that I wanted to leave, he's been very clear that, look, I mean, if it's going to take you further into your career, I will not come in your way. So, uh, and that's been a great learning for me as well. And in fact, as when I now am running a team of 10, 12 people under me, uh, I'm happy that I'm able to kind of convey that same message whenever it comes to whenever such a stage arrives at my in my life. So
Yeah.
I think to be very fair to them, I mean they've always backed me up, and I'm happy that I've kind of been able to create some identity uh, outside of the alma mater, if you wish.
There is a cosmic connection sometimes that works, Tahir. You were obviously in many ways remembered for Hero MotoCorp, and Mr. Ravi Sood had left Hero and came back. And recently, also the changes that have happened in Hero, there are some people who had left and came back. So, in some ways, there is a cosmic connection out there in terms of people. So, are you still in touch with your folks at your friends and your colleagues at Motilal Oswal? You're still bouncing ideas of each other.
Yeah, we do that periodically. Not as much as what obviously we used to do before, but we still have a WhatsApp group actually between 4 or 5 of us. So some of them are there, and I'm there. So it's nice to kind of be there, keep exchanging views, and uh, you know get to know. So we've always been on good terms, and we've always it doesn't help. I mean, as far as the market is concerned, it's too large, and it's larger than all of us. Uh, and we'll always have something to share uh, at times. So everything from stocks to everything else. So yeah, I am in touch.
I have a WhatsApp broadcast list of fund managers, which I broadcast messages to from whatever we do. And I sent out the invite of our interaction today. And quite a few people, at least 6 or 7 people, wrote back to me saying, "You're one of the most humble people in the fraternity." And this came from your peers. This is not from sell side brokers or anything. This actually came from fund managers and other houses, people that you've interacted with, and said that he's genuinely one of the nicest and most humble people that they have met. Is that a conscious thing, or were you just innately this way from your childhood, or has uh, or did you just decide that humility is going to be one of your traits and you work towards it? You come across as Mr. Nice Guy to most people.
I never tried to kind of position myself that way. That was never a conscious decision to do that. Uh, but I mean, it's probably been the upbringing, or it's been just the way I am uh, in construct. Uh, I don't believe in confrontations or confrontationism.
Mhm.
And I don't really think it helps. Uh, Even like as I said, uh, see in the markets, it is something a lot of all our relationships, whether it is between you and me, sell side, buy side, or whether it is between buy side and clients or investors, it is all about trust. This is a business of trust, um, uh, like it is probably in case of banking, and because it's beyond a point, it's not a tangible product. There is a product, and uh, but otherwise it's entirely based on trust, because nobody has a clue as to what's going to happen the next day. Uh, in So this is ours is a unique business where you go in the morning and at 9 o'clock, and you don't have a clue what's going to happen to you, and or how your day is going to. It's not like sitting at a grocery shop, or it is at a pharmacy shop, or even a manufacturing company where यार चल आज के दिन में मेरा 10,000 गाड़ी निकल जाएगा या कुछ और हो जाएगा वैसे. You don't know what's going to hit you, and uh, so I think it is important to be grounded. It is important to be to uh, to convey that trust. So I think the that whole contract of trust between all parts of the capital market ecosystem is the most important thing. And uh, I probably realized it. Uh, in fact, I'm articulating it to you even as I speak. But I think
Mhm.
subconsciously, I did realize that that was something which is the most important thing here. And even when you asked about, and when I answered about, things like whether I felt okay, I'm now belong to this industry and so on. I could, I knew that if you're open, transparent, and if you can be trustworthy in this industry, people beyond a particular point, it is not about only returns and yeah, whether you're number 5 or number 3 or number 20 or peer group rankings and what's your 1 year track record and whether you're beaten or not beaten. That's maybe at some point, but beyond a point, it is all about whether they get that feeling that okay, this guy is or the guy in front of them is somebody who is going to you can be trusted with your money. It takes a lot for anybody to trust anybody else on the other side with one's money. You
Absolutely.
might trust
Absolutely.
anybody with anything else, but not with your money at the end of it. So uh, I just felt that it is something which I could bring to the table naturally, and I uh, and made a lot of sense at the other end. So it helps from the from the point of view of the business that we are in. So I think that's probably how it works. But I can definitely say that uh, it was never preordained or premeditated as such. It's probably something which
And
is
yet,
natural. Some blokes are born that way, let's say. So that's how it happened with.
so I want you to just put on an MBA professor's hat and just talk us through one small case study where you spoke about value and growth and certain processes that you have put in place in your investing career. And you look at a name like ITC, which has always presented value. So if you were teaching a class full of students and you had to explain to them the story of ITC and why it continues to underperform despite having value when 25,000 crores on cash on books, how do you reconcile the two?
So it's an interesting question, and ITC is something which even for us as a value pick is not worked out, and it's a unique case in many ways because generally when we look at value investing or investing in stocks which come from a value standpoint, uh, we have to we have what we keep in mind is the fact what we have to be extremely sure about is risk of franchise and risk of balance sheets. Okay.
Mhm.
Uh, because in value you don't have any fallback option. You don't have growth running in that company of order of magnitude which will bail you out if need be. Uh, so the only thing that can bail out that stock or that company is, and as an investor for you is the strength of the franchise and or strength of the balance sheet.
Mhm.
In some we have one, and in some we have both. And ITC is one example where probably there is a strength of a franchise also. There's a strength of a balance sheet also, and there is a franchise as well. But uh, while the strength of the balance sheet is not as much in question, the current scenario around the business or the perceived scenario around the business is that the franchise will weaken over a period of time. Uh, uh, or it is on at least one part of the business, which is the mainstay tobacco business. Um, Whereas the franchise on the other side, which is on their FMCG and the other part of the business, so while gaining in importance, it is not gaining in importance at a speed at which it will counterbalance the uh, gradual erosion in franchise value of the core business. So
Mhm.
it is a case where today you're at least not worried about the balance sheet aspect of it, but what is coming in your way is probably the franchise value. And
Mhm.
uh, in 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 cases where you're investing for value, you need to make sure that either of the two are not going against you. Uh, you know, uh, Unfortunately, here in case of ITC, uh, the gradual erosion or perceived erosion from the point of view of the market and franchise value is hurting the stock. And uh, even for us, I mean, as it happens with every investor, you need to kind of keep reviewing things. So especially in value
Mhm.
stocks, like as I said, we have to be very, very careful because your time horizon is a little indefinite. You don't know when your value will crystallize. And the second being that your fallback options are basically, like as I said, these two things. So you have to be on the alert that if you have gone in with a value proposition, and if and either one of these two things are working against you, then you don't have a choice but to reassess things and reassess your view on the stock or view on the company. Uh, uh, and we had to do so in the last 2 years on multiple occasions in case of ITC. And not just ITC, I think there are a couple of other such examples also which have gone that way. We had a couple of companies in the entertainment business uh, which
Mhm.
uh, which have gone through that same phenomenon where balance sheet was not at all at risk, and we it was bought as a value proposition, and we were wondering as to why we are going wrong and so badly wrong. And uh, sometimes it is apparent, sometimes it is apparent at the upfront itself and at the time of investing. Sometimes it is not as apparent, and it becomes a little more clear as you go along. But you don't have a choice as a manager. If it comes to light at a later date, it's important that you take action immediately. I mean, as early as possible to reverse it. So we had to do that in a couple of cases, even in the last 2 3 years, as I can recollect. So that's an ongoing risk of value enterprise. Essentially, what I'm talking about is value traps. These days, value traps
Mhm.
get defined in uh, a few different ways.
Interesting. We've been going at this for the last 60 minutes, Tahir, so I think I won't take up much more of your time. It's been an absolute pleasure listening to your journey, your formative years, your investing style, your thoughts on how to go about, your business and your ethics and your practices. I'm sure everyone who's logged in and who will probably view this on social media going forward will learn a lot coming out of it. I've known you personally for over a decade now, and I think you're just the same as when I first met you. So more power to you, and more success to you as you go along.
Thank you very much.
And I hope you had fun being on. I mean,
Oh,
this
absolutely.
is
It
not my
is.
profession.
No,
you know,
I wish we could have done this earlier. I mean, I did, you know, defer this on a couple of occasions, but it's nice to have been on this form. This is the first time I'm doing something like this. Uh, which again, to answer your question, probably makes me feel that, okay, I belong somewhere. So, so it's nice. It's nice to have done this. Uh, it's been nice having been associated with Nirmal Bang and in more ways than one. So, and I've known you as well, and the way you have grown yourself as well as grown this firm in your leadership over the last more than a decade now, I guess. So, more power to you as well. All the best to you and your firm. Keep doing the good work, what you have been doing, and uh, uh, stay safe. Wish you all the best for all of you.
Thank you so much, Taher. Wish you the same. Stay safe. Good luck, and we'll connect soon.
Certainly.
Thank you so much for doing this.
Thank you for listening in.
Thank you. Thanks
Bye.
for everyone else joining into this broadcast as well. Thank you so much. Take care.